Have you guys seen the price of gold today? I mean, if you go onto the Bank of Ghana, their website, they have the gold coin. 1 ounce of gold right now is trading at 60,000 Ghana cedis. Half an ounce about 30,000 Ghana cedis, and what, a quarter of an ounce about 15,000 Ghana cedis. For context sake, if you check at the beginning of the year, around 2nd of January, 1 ounce of gold was trading at 46,000, half an ounce about 23,000, and a quarter of an ounce about 12,000. So just for 1 ounce, it has literally gone from 46,000 to about 60,000, about 15,000 Ghana cedis in gains in less than a month. Crazy. If you check the current price of gold right now, it has had a massive rally over the past 1 year. However, as of today, the day I'm recording this video, the price is dropping. But I think it went from 5,425 to about 4,887. So I'll probably say maybe profit taking, and also yeah, I would say profit taking. People have missed huge sums of money that they're starting to sell off, and I think it just goes to show how there's global uncertainty, like because of a lot of things, including what Trump is doing, wars, geopolitical tensions around Greenland, Trump's plan to take over Greenland, and all. Like there's a lot of uncertainty. The investors are not even confident in the US dollar, so they are pushing their funds into different assets like commodities, and we are seeing the prices of gold, silver, and other commodities rise drastically. If you're invested into this particular channel and you own gold, I would love to know, how has it been? Your experience so far investing into gold? Comment it down below. I would really love to know how the whole experience has been. Now, as you guys all know, I'm the Cedi investor. Welcome back to the channel. As for today, what we are actually talking about, we are talking about the economy. We have NPC. It was released by the governor of Bank of Ghana last week Wednesday, and surprisingly, I'm saying surprisingly because although I expected him to cut rates, I didn't expect a massive cut. What do I mean by massive? Anything more than 100 basis points. Like, I didn't foresee him cutting more than 100 basis points, but surprisingly, he made a 250 basis point cut. I'm going to give you my thoughts and commentary on how I think the NPC is going to look like moving forward, and how I think it's going to impact some certain stocks on the market. Also, we're going to talk about banks, the good and the bad. Is the policy rate cut, and also we moving towards a low interest environment? What do I foresee for the banks? Is it a good thing or not? We are going to discuss it, and then we are going to talk about inflation. The statistician, the Ghana Statistical Service, they're going to release inflation next week. I'm going to give you my expectations on inflation, how that is also going to impact NPC moving forward. Is based on my inflation expectation for January, just January. Is it going to impact how the BOG sees their policy rates moving forward? And also, we have some financial TikToks as well. So we have a lot to discuss in this particular episode. So the only two things I would ask from you is just to subscribe if you haven't already, and like the video. Let's get into it. Like I said earlier, the BOG decided to cut its policy. It was previously at 18%, and now it is at 15.5%. So a 250 base point cut. Personally, for me, I agree with the decision. But the only reason why I was a little bit shocked is because since the start of last year, when the new governor, Asiama or something, I don't remember his full name, but when he took over, he has showed me that he's cautious. Like, he's not someone who's going to be alongside the whole BOG committee. They are not really going to aggressively be cutting rates unless they are okay with where inflation is.
And let me explain that is not an official commitment. That's my own personal, wish, my personal aspiration. Why? Because I have seen very high lending rates all my life from when I joined this institution in 1995. Lending rates have always been extremely high. It is my personal dream to see a reset in terms of lending rates. So it's just my own personal commitment, not an official one. And I must say that we are on course so far. Someone this morning was telling us that his bank called him and invited him to apply for a loan at 15%. 15%. A year ago, you were talking about over 30%. And then it is significant to know that banks are now beginning to call clients and asking them if they needed any loans that they could come and apply.
Now, if you are working at the bank and this is true, please let me know. Comment it down below because I want to fact check this thing. Just because he's saying it does not necessarily mean it's true. I think, I'll probably have. I think I'll make a video where I'll have conversations with bank. Maybe I'll try and reach out with maybe one of my banks and this thing and try and see if I'll be able to get a loan at around this 15% to maybe 18% range. If that would be possible, I think that would be very, very great. Just take a look at the recent Treasury bill auction results. This just came at 30th January 2026, the day I'm recording this particular video, and we can see the 91-day Treasury bill. Look at the number of bids tendered, around 5.9 billion Ghana cedis. So bids tendered means the amount of money people wanted to invest or send to government to invest into treasury bills. Bids accepted were the amount of money that government accepted out of the bids tendered. So if we have bids tendered of 6 billion, means an amount of 6 billion Ghana cedis was sent to government to buy treasury bill by banks, institutions, retailers, everybody combined together. Then out of the 6 billion, government accepted only 2.7 billion Ghana cedis. And the interest rates, the average interest rate that they placed on that treasury bill was 10.826. 10%, 10 almost 11%, 10.86. Last week before the policy rates, it was around 11 point, let's see, 11.1, 11.2. So about a reduction of about 28 basis points if we are around that level. For the 182 day bills, was what people tendered in 4.6 billion, government accepted 3.5, and for the 364-day bill, people tendered in 6.5 billion and government accepted 5.9 billion at around 12.83%. So the average rates right now on treasury bills are between 10.8 and 12.8, and we are still seeing huge sums of money by investors, both institutional and retailers, being pushed towards the treasury bill market at very low rates. And look at what I'm even saying. We can see that from all the bids tendered, the huge amount of money was sent into the 364-day bill, meaning that what investors want to lock up their funds for longer, because it's either because they are anticipating that the rates that we have right now, 10, 12, 12.8, is going to even reduce further. Because think about it. If I have 2 cedis and I know that 2 cedis, if I invest it for only 2 months at the current rate of 10%, by the end of the 2 months, the next rate that will be available will be 15%. Yes, then I will do that. Like, I'll invest it for 2 months. When after I invest it for 2 months for 10%, and at the end of the 2 months, the next rate is 15%, then I just reinvest it into 15%. But if at that 10%, my 2 cedis, I believe that after the 2 months, it's rate at that current level is going to be 8% or 5%. It means that when I invest my money for the 2 months period and I get the money back, and I want to invest it again, I'm going to invest at 5%, which is very, very low. So what would I do? I will say, okay, instead of investing for 2 months at 10% right now, I invest for the whole year at the 10%, meaning that what I lock in higher rates for a long period. So if we are seeing a lot of funds being pushed into the longer treasury bills, which is the 364-day bill, it kind of shows that the expectations of investors, both institutional and retailers, we don't know necessarily whose funds were being pushed into the 364, but it's just an expectation, is that they believe that this 12.8 by next week or 1 month from now or even 3 months from now, it's going to be lower, if not lower, relatively around the same level compared to last year. So they want to lock in their funds for a longer period. Now, it doesn't necessarily mean that's what's going to happen, but that is what they expect. I know if you get what I'm trying to say. So it just shows that even investors right now, we are feeling the effects of how the low interest environment is right now. And yeah, even though in terms of the investment side, it's not really looking as lucrative as especially for fixed income market, treasury bills, bonds. In terms of the cost of borrowing too, that's where the real attraction comes from. Because from what the BOG governor is saying right now, if I'm able to go to a bank to get a loan at 15%, bro, that's crazy. 15%? Like, yeah, it's becoming more realistic for me to take a loan at 15% to start a business, because I know that, oh, if I put in the measures to make sure that the business runs well, at the end of the year, I'll be able to get 15% to pay back the loan off and whatever, or the interest on the loan, and still be okay. But then times where actually loans be around 40 plus percent, like, what business realistically do you want to do that within a year you can get 40 plus percent to pay back there? Like, it didn't make sense, especially for small scale businesses. Like, it didn't make sense for them. You understand? I'm going to borrow about 100,000, 500,000 Ghana cedis, and you expect me to pay back more than half of that amount, or close to half of that amount, as interest to you. Now, Charlie, profit in the Caribbean machi, you bab. So it didn't make sense. But now rates are actually becoming favorable for, people to actually take more risks in a particular in the economy. So I think from that standpoint, it's very, very okay. Now, for banks, is this a good thing or not? I've already explained what's happening with the treasury bill market, and what we already know, that banks right now, their main source of interest income is from treasury bills. Let's explain as simple. Banks predominantly in Ghana right now make majority of their money from interests on the treasury bill market. Now that this treasury bill rate has gone drastically low, Charlie, like, if you are yes, you might still make money from it, but it's not going to be as drastic as you made it last year and also the years before that, Ubab. So if you are relying solely on treasury bill markets, then the expectations for banks is that their growth is going to drastically reduce. And if banks are not growing as fast, are investors willing to price into it premium valuations or overvaluations? Are you willing to buy banks at expensive prices when you know that they are not going to be growing as fast, and they are also being heavily reliant on government, which government has shown is that if it comes to time, we make them show you something and they show you something. So I think that's also something you should think about. For the bond market, we'll have to see how that goes, because government's plan is to introduce infrastructure bonds that their main objective is used for construction of road, and they say they're going to do like tolls and all those things, and that's how they're going to do repayments. But they've not brought it out yet. I'm expecting between, yeah, around from now to March or April, probably during that period, they would give us some information as to how the infrastructure bonds are going to happen. So we'll have to wait and see. Until then, we don't have any information as to how the bond market is going to look like. We also have the equity market right now, and I, like, again, when you look at my expectations for the equity market, this was one main reason why I said this year is going to be bullish for the equity market, regardless of how I'm viewing almost all the companies on the Ghana stock market. My When I look at the companies, I would say there's not a lot of companies I would say they are trading at attractive values. We have some though, not all. But then, because of how the liquidity, because right now, this even from the base standard, we realized just the past week, banks, what ish around 17 billion, yes, yeah, if I'm correct, 17 billion, and last week they did 15 billion. Just last in treasury bills, that's how much they tendered, but government did not accept everything. So it's showcasing that there's a lot of money in the system now. When you add that to low interest environments, where now retailers, we can even go and borrow at cheap rates, it's just going to showcase that there's going to be a lot of liquidity into the system, a lot of spending in the system, which is going to benefit businesses. If there's a lot of spending, people are spending a lot of money on data, it's going to benefit MTN. People are spending a lot of money on what fuel, it's going to benefit Go and Total. People are spending a lot of money on farm milk and drinks and whatever will benefit farm milk, Guinness. These are going to benefit the businesses. Also, now that for retail investors specifically, they can also borrow to have more money to also invest as well, which is also going to benefit the business from the shareholder standpoint, if you do get what I'm trying to say. So I might be very bullish for 2026, but my bullishness is not really based on valuations of most of these companies, because let's be honest, at this point in time, most companies are trading at overvaluations or are trading at premium values that they don't deserve, at least based on my metrics or strategy or whatever you would like to call it. But then, because there is people willing to buy and people willing to sell at those high prices, all you would see is that those companies going up, regardless of their valuations, if they are not doing as well or not. I mean, if we are in a community where CPC is growing in terms of the stock price, me, Charlie, it's just a case for showing how overvalued our overall market is, which I do believe that's the case. It doesn't necessarily mean the stock market is not going to continuously go up. So you I don't I think probably I'll have to make a separate video talking about the how overvalued I believe the market is. I mean, that's my opinion. Not you could have a different opinion or not, but that's not what I'm talking about today. So now banks have to become creative or adaptive. They have to start looking at the loan aspect, and that's what the BOG is saying in terms of banks being creative to call clients to get them to come and loan. But then the thing is, the default risk is still something they are battling with. Remember, out of about 28 banks we have in Ghana, about one or two of them having are banks that have NPL less than 10%. And that's a crazy number to think about. That means the default rate in Ghana, even though it has been declining over the last year up till now, is still quite high. So banks would have to put in measures to make sure that they're giving the loans to the right person, which can be more difficult than, like easier said than done. And when we move towards inflation is going to be, I'm hopeful that I'll post this video on a Monday. So by Wednesday, we'll have the inflation figure for Wednesday. Now, inflation currently right now is 5.4%. The CPI was around 261.7. Month on month, inflation grew for December 0.9%. So, for inflation to rise in January 2026, I did 2025, it's supposed to be 2026. For inflation to rise, we need month on month inflation to be higher than 1.7%. I don't expect that to happen. I don't think month on month for January is going to be 1.7. I think we're going to see anywhere between 1% to maybe 1.2%. So based on that, when you do my calculations, I'm getting a CPI of around 264.3, which will give us a general inflation of between 4.5 to 4.9%. That's what I expect inflation for January to be. So basically, all I'm saying is that inflation or prices of goods and services are going to grow by 4.5 to around 4.9% based on my estimations. It is still at the lower bound of the BOG inflation targets, which can give room for the BOG to even bring the MPC rate lower. So for my inflation expectations, especially for this year, unless anything drastic happens, I'm not even seeing. I think inflation at end of 2026 will be around 8 to 10%. That's what I'm anticipating, barring any shocks that will happen in the economy. I don't really see inflation surpassing the 10% mark. That's the higher bound of BOG's target. Now, in terms of my investing, how has this affected my investing? And personally, it hasn't changed anything. Like, at the end of the day, I still focus on the fundamentals of the business. That's what I want to know, because macros are more of short-term things. Like, it really focuses on what's happening at the current moment. Whereas what you should be focusing on, or what I believe you should be focusing on, are the fundamentals of the business and the story behind the business, like what you do expect from that business moving forward, and the reasons or your thesis why you invested into that particular business.
So this year, I'm on a mission to save 10,000 Ghana cedis. And here's why that is a very big deal for me, okay? So I'm on a teacher's salary. And if you're in Ghana, you know what a teacher's salary looks like, okay? I'm on a teacher's salary. And most importantly, I'm taking myself through a second degree. And it's being funded by me. It's not like somebody's there who wants to fund it and I'm not letting them do that. It's being funded by me. And I'm so proud of myself, you know, clack it, clack it. And also, I live very far away from home. I'm renting and paying my own bills. So if I could get myself to save at least 10,000 Ghana cedis on this meager income while still schooling, then just imagine what I can do if I start making big money. Okay? So if you want to come on this journey with me, you're welcome.
All jokes aside, now I think the only thing I would take from this video is that regardless of what amount of money you make, if how much do teachers actually make? I would probably think not that much. But then I would say that regardless of whatever your income level is, you can strive to save something. Like, yes, yeah, maybe some people might not do, but then I think I would always say that the main focus is to focus on trying to elevate your income. So whatever thing, if it's learning a skill, going back to school, starting a business, maybe a hobby you have that you think you can monetize, any way you can elevate your income should be the goal. But despite that, regardless of whatever income you do have, you should still be able to set aside something. I think it's a very good skill that can really help you, especially during periods when you don't really have as much as you would like. When you have unlimited, yeah, be that would be a different story. But then, yeah, being having the ability to save, I think, is very very good. And yeah, I'm proud of you. So congratulations, and hopefully you are able to do that at the end of the year. Thank you so much for watching this video. Let me know what your thoughts are on the MPC, on inflation coming on Wednesday as well, and how that's impacting your investment strategy, if it is impacting your investment strategy. Thank you so much, and till we meet again, please like the video, subscribe, and have a lovely and blessed day.